Hello, good afternoon, Sir Earl. My name is Jensen Tabada, and I'm going to report about role of financial intermediaries in social economic development and changing nature of financial intermediaries. So, first, role of financial intermediaries in social economic development. So, financial intermediaries are important role in the social economic development. They bring the available funds from the urban areas to the rural areas, which are sila ang mostly needed sa funds. Sila ang nagpa-lending sa mga farmers and sa mga rural residents that needed to improve sa ilang status life. Pwede sila mo borrow sa cooperative banks nga gikan sa microfinance thrift banks para maka-start sila ginagmay nga small business such as kanang example tindahan or para sad makatabang sila sa pag-eskwela sa ilang mga anak. So nakatabang ang cooperative banks and the microfinance thrift banks by making the rural areas to be improved and developed. They help the rural areas to establish a school para sa mga bata. And then, the objective is to help the poor country or the family to encourage ang usag-usa and to promote entrepreneurship and to be motivated. So, moreover, financial intermediaries help a lot the rural folks, and they partnered with the government to uplift the economic and social standing of the community. So they maintain the financial system, mobilize the financial resources of society. And the changing nature of financial intermediaries, so creation of branches was limited and interest rates were duly regulated. So ang thrift banks or the institution to protect the banks where gidili nila ang consumer and commercial loans and long-term fixed rate mortgage. Life insurance companies allowed to issue policies and purchase corporate bonds. Ang commercial banks kay dili na allowed to underwrite corporate stocks and bonds, so which became the dominion of the investment banks, and dili sila allowed to hold common stocks in their investments portfolios. Other than that, dili sad sila allowed to accept household deposits. Financial institutions became highly specialized companies that issued stocks and bonds had to go to an investment bank for underwriting their issues and go to commercial banks for loan. So in early 1970s, the MMFs or the money market mutual funds are first introduced by households and small businesses to have access to saving tool better than deposits. So credit cards also grew secondary to advances in computer, making profitable sa mga bangko. So diha na nga ang credit cards mauna ang giyo sa mga company and sa mga tao. They boost the commercial paper market and allow the small business to borrow sa finance companies. Misa kasad ang demand sa mortgage, tax security. So, securitization means loans gihimo sa bangko ang finance companies for transform into securities sold in large blocks. So that's all, sir. Thank you.